India's largest initial public offering has landed on the D Street in its subdued debut. Shares list at 1.3% discount to IPO price at 1,934 rupees a piece. Brokerages sound bullish on the company with a possible upside in the stock price. Puneet is here with more. Puneet, what are the brokerages saying about the company?
Well, that's right. The results, the listings per se was a little bit of disappointment. But since being the largest IPO, I think that's what they get. Now, the problem is that brokerages have actually come out and, upgraded the stock to a buy. And they've initiated coverage on the same. So Nomura is the first one. They've initiated the stock with a buy with a target price of 2,472 rupees per share, or roughly about 20% upside from the current market levels. Now, Nomura has said that Hyundai has consistently been able to predict the change in the industry as well, and that was the last done when the SUVification of the industry, so as to say, happened in 2015 with the launch of the Creta. At that time, the SUV share was just 13%, has now increased 68% for a company like Hyundai. Apart from that, they mentioned that they are poised for long-term growth with this higher XUV mix as well, with improving average selling prices, which will help margins as well as increasing the market share going forward as well. They've also said that having an Indian management on board for the last 2 decades has helped the company Indianize itself much better, and they're looking to increase that as well going forward in the listing. For the estimates as well, the Nomura is expecting a 8% volume growth over FY25 to 27 with the launch of 7 to 8 models for the company. They are also expecting EBITDA margins to come in at 14% versus 13.1% for FY24 over the next 2 to 3 years. And they're also saying that the Indian PV industry is expected to grow roughly 8%, 6% CAGR in the next 5 to 10 years, and Hyundai will be a key beneficiary. A similar notion has been echoed by Macquarie as well. They have a target price of 2,235 rupees per share, and essentially it says that Hyundai's market share in the compact and the mid SUV has been stable despite higher competition from Tata Motors and Mahindra. They've also said that it has outperformed its peers such as Kia Motors, which is a sister company, as well as Maruti Suzuki, and they have also higher EBIT realization per unit as well as EBIT per unit as well compared to someone like a Maruti. So they estimate a 12% CAGR between 25 to 27 and implying a 25 PE, both these brokerages are, which is a little higher, 15% higher than Maruti Suzuki.